Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we closed on the highs on Friday and then gapped down and closed on the lows of the day on Monday. Today, we're gapping up, so it seems like there's a lot of misdirection out there, Scott. Could it be pretty frustrating for traders?
It can be very frustrating for traders, and I think yesterday in my note I said you either have to really take a big step back or just micromanage your trades, meaning I do think that intermediate and long term, we take a stab at the highs of the S&P of 1550 to 1575, but short term, it felt like we need to be a little bit cautious that we were starting to get some choppy action. So if you're an intermediate trend trader like me or an active intermediate, you take some positions off into what we saw yesterday, which was the first potent down day.
Yes, and the S&P closed below its 8-day moving average for the first time this year. So what are the key levels you're watching there?
Well, with that said, that was another reason why I said, okay, I'm going to be in portfolio approach, which I'm still in, but less. As long as we stay above the 8 and the 21-day moving average. And typically you close below the 8-day, you get some kind of corrective process to maybe test the 21, maybe test some bigger levels. So, by it closing on the dead lows yesterday, I'm sure some guys pressed shorts. At least I didn't do that. But I also didn't, I don't just start buying more positions when we have our first potent down day. So if you look here at the chart, you will see that, since we started the year with this gap and go, we've been following this 8-day moving average with all green bars. Then here was your first 2-day little choppy time period before the jobs number. And here is when, like you said, we closed on the highs on that Friday. So closing on the highs, it felt as if, okay, maybe we can continue. So right there, guys who added to positions probably were trapped and hit some out yesterday. So then yesterday we closed in the lows below the 8-day moving average. So it made some sense to potentially come in, test the 21-day. I know I would have loved to have been a buyer there or test the prior breakout, which was from September here. So this seemed like a really good, continuity type of spot. Anyway, we're gapping up. If you want to look at resistance, this is 150.40. We're above that. I would say I think yesterday's gap, if you look at the 5-minute chart here, you will see in the spiders, the gap starts right around 150.60. So if the bears have any type of hope / control / whatever it is to keep some pressure on, they probably shouldn't let a majority of this gap get filled. So they should keep it pressured here. So if you are short from overnight, maybe you test a little bit versus gap, which is right around 150.57. But don't be frustrated because all in all, market environment has been very strong. Bring it all the way back from the November 16th low all the way to where we are right here. So just a little bit trickier.
Well, let's check the temperature of high beta tech, which has been a mixed bag, but we saw some weakness in the group yesterday. Apple, case in point, the stock dropped another 2.4% yesterday. So now it's around the pivot lows of 435. What's the level it needs to hold?
We talked about maybe there being a decent development in Apple if it held above 448.50 to get above, 462 into the earnings gap. And then just like we've seen time and time again since the great decline from 700, maybe you get a 1 to 3 day move and then it turns lower and breaks levels. You look at the chart of Apple, you will see here is that top here above 700, broke the 21-day, that's when it became a trade for us, then touched a 50-day, bounced up, went lower, and then you guys know the whole story. There were some long trades along the way, but nothing compelling. And then here was your last little inside range, so let's take a little bit of a look there so you could see it a little bit closer. That wound up being broken to the downside. Remember this 448, I'm like, if we could hold here, perhaps we get a move above 462 into the earnings gap. Well, it broke below. So now with the futures, it's opening up a little bit. I guess see if it could stay and hold the gap up, and to see if it can maneuver this lower range. But if it starts to go negative and trades through yesterday's low 442, boom, you have 435, and then you have to go back to your macro chart all over again, and you will see that there is a gap right here that gets filled all the way down to about 423-ish, or maybe even closer to 420.
Well, Apple's not alone. Amazon had its third consecutive down day, closed at lows. It launched its 8 and 21-day key moving averages. So what's the key level that Amazon needs to hold?
Amazon changed a bit after earnings. Like the past few earnings reports, the street's giving them a pass. That they miss, and all of a sudden it doesn't go down. And I remember after the report, we talked about what will Amazon do near 284. If it doesn't get above there, maybe you sell some or you try and short some. And then you had that really wide range bar that showed you, a little gyrations, and gyrations are typically institutions selling. So from there, if you look at the chart, you will see it hasn't, imploded, But this was that resistance, okay, that it never got above. Here was, I think, your earnings day. And from there, it's been trickling lower. So here we are right around the 50-day moving average. I would say some Amazon bulls might try and buy some versus, but here's your pivot. Okay, right down 258.35, maybe it breaks through it and then creates some kind of red dog reversal for a trade, or who knows, maybe it just continues to the downside. So at this particular point, it's up a little bit with the futures. So here's your resistance that comes in around 266, and here's your lower pivot. So let's see how it maneuvers this area. Amazon is going to be very choppy for a while to work off this little mess here.
Well, Google made a new all-time high on Friday, but couldn't hang on to its gain yesterday. It gapped down yesterday morning and closed at lows. So what does its action tell you?
Well, it's just part of the whole frustration mantra. It closed at all-time highs on Friday, then it gets downgraded yesterday, and it doesn't even fill the gap. So if you were a short-term trader, you really didn't have a way out, and you had to probably let some loose. If you're an intermediate trader or you're a macro investor, you have not much to worry about as it's near historic highs. You've enjoyed a really nice run, but it all depends on your time frame. You go look at Google now, as far as a trader, I was hoping that we'd get a gap down today and see if we could be a buyer into this area. Instead, I think it was downgraded again today. It's up a little bit. So here's your level, right down 758.27. Here's a new, area that you could trade long against if it were to break below yesterday's low. Here's bigger support coming into 745, and then you have, this earnings gap that we didn't even come close to testing after the report. So at this point, I would take it from a micro approach if that's the way you trade it. If you're a macro investor, I think that you've enjoyed a nice ride, and stay with it. You might want to hedge it just a little bit.
Well, on the flip side, Netflix was back in motion yesterday, climbing more than 6% and into short-term resistance at about 176. So can it get more momentum above this level?
Well, that's something we would like. Momentum traders love momentum, and as you can see by the choppiness, it's hard to find. So at least momentum, like the king of momentum stocks, has been Netflix. You had a huge gap up after earnings. You had continuation. It's flagging nicely. Yesterday it was up considerably in a down tape, so you would think if anything could get follow through, it could be Netflix. So you go to the chart here and you will see, it closed at the dead highs of this consolidation. So if you were trapped short after earnings and thinking you get a pull in after earnings, it's been consolidating. So you probably have to be thinking and a little scared here. And same way, if you're a bull in Netflix and you think that perhaps it can get to fill this gap, if you look across here, which comes in right around 200, it's going to have to clear 175 to 177 for it to do so. So this is a major pivot area. We will be watching it today to see if the trade develops and see if it could be any clean at all. And
Baidu reported earnings yesterday, coming in a little bit light. The stock has been a laggard. It's getting punished this morning. So how are you approaching Baidu?
I'm going to look at it down $7 at the 50-day. It's been a laggard. It might be priced in. The earnings weren't blockbuster, but they weren't horrendous either. The stock has been a choppy mess, and just a trade for some. I know recently we tried to buy it and it didn't work as well. It did work at the red dog reversal, but since then hasn't been anything compelling. You look at the chart here, you will see, from all the way up here back last July, it's been just methodically going lower. So it hasn't been like a go-to stock or a leadership stock. Here's where it got tight again after a nice reversal in late November, and here's where you're opening up. So if you take a closer look here, you will see here's a 50-day moving average of 101.74. It's below it. So see if it opens up down here, and if it could, if you could trade it versus the low for it to potentially fill the gap at all, it would be helpful or constructive for longer-term prices. But if it opens and gaps down and doesn't fill it at all, then you have this huge hole to contend with, like we saw in Apple, or even real quickly, BMW, big hole lower, in this lower range. I think I have this on a quick hit, but I was just thinking about it. So, this is one of those things where maybe you get a trade if it goes into the gap and that gap starts at 80, but as of right now, this is controlling the direction. So see if that changes.
Well, coming up, we're going to go into the trenches with metals, which perked up yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, Joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with metals, which woke up yesterday. You actually got involved with the GLD yesterday, Scott. So what's your strategy here?
My strategy is that a lot of people thought it would have run already, that it's been consolidating and it's been out of play. And I've tried it a few times and I lost, and I don't even know if this is the exact time that it's going to go. But what I see is a very tight pattern. When I see a tight pattern, at least it gives you points of entry. And I actually thought that we maybe would be pulling off a little bit in the broader indices, so maybe some money rotates to gold and silver. But anyway, let's see if we can hold today's gap up. You look at the chart of the GLD, you will see, it put its high in all the way back here, in this August-September area. And since then, it's been just consolidating in a very monotonous way where you had to be really, really choosy on when you want to be involved here. If you remember over the summer, we caught a nice trade in, the end of July, all the way back up to this peak. And since then, it's been, in a downtrend when you have a high, a lower high, and here you are tightening up. So if you want to take a closer look here, you will see that here is this inside range here. So in order for gold to really wake up and me to be in more than just a tier 1, because that's all I'm in right now, it really has to get above 163, and really for power, it should get above 164.40. If that's the case, perhaps we see a really nice move, and and then all of a sudden you have resistance up here at 170, and then even higher. There are a lot of macro guys on. I was on CNBC Asia last night with a macro gold guy thinking we get to through the highs of the year. In order for that to happen, we have to get through this minor point, and then you even have another bigger range right around 175. So I'll take it as we can go. I'm just hoping we can clear 163, 164 and make a little cash flow.
And then with silver, what are the levels you're watching in the SLV?
Silver, same scenario. The level here is around 31 if you look at the chart of silver. Last year, if you remember, over the summer, silver actually led gold, and it was a really nice trade. It actually went before gold. So far that hasn't happened here yet. This is, in August when it ignited, and from here you had a really nice move before getting faulty. And since then, it's just been the same type of thing. You have a high, a lower high, and now you have a really tight range where it's been underperforming, but sometimes money rotates. So for silver, a start would be to get above 31 with some kind of force, with some kind of volume, and then perhaps it could get on its way to retest this trend line, which comes in around 32. Right now it's just tight. I'm in some of it, and if it can close above 31 with some authority, I probably will add to it, but it still has a lot to prove.
And now in terms of the miners, there was some aggressive selling in the GDX about 2 weeks ago. It is trying to contain the damage, but is more downside in store.
You know what? I'm not going with the miners. Some people do. Them individually, they always usually hurt me. As soon as I buy one that looks good, one of their mines blows up, or one of the governments say they're going to, tax the profits on everything. And if you look at the chart here, this has been in an extreme downtrend, all the way from 56 all the way down. You have a little lower tight level. I did not buy it, but I guess if gold goes, there could be a trade here if it gets above 43.14 to then test this trend line, which comes in above 44, but I probably won't be involved there.
And then you take a silver mining company like SLW, which is trading around key moving averages. What level might that need to get to break above to get some momentum?
Sometimes, like a silver wheaton, it's a leading indicator for silver. So some people, when I tweeted yesterday, I'm going to initiate small silver, guys were like, oh, take a look at this. It's showing you some signs as well. So if you look at the chart here, you will see when it goes, it likes to go. And when it went over the summer, back here, it had a really nice move from 28 well through 42. So this was a much bigger percentage move versus silver. So sometimes the stock acts better. So here you are in this lower range. It perked up yesterday. For this one too, to be honest, it's going to have to get through 37.23, and then you have a wall of resistance at 38.5. You go look at the macro chart, and I don't know enough about these type of companies, but at this point, here are your levels, and if it's something that you like, if it got above this level, then it really looks good for you. But again, it's step by step.
All right, time for some quick hits here. Bank of America woke up on Friday after a few weeks of rest, but still lacking momentum. So what are the key levels you're watching in Bank of America?
Bank of America, I'm trying to stay with, is one of my swing trades. I added to it on Friday as it closed around 1170. I probably won't get back in heavier until I see it hold above 1160, 1170. So above 1175, perhaps it gets back in motion. But again, the market's been a little choppy lately.
And MGM has been holding higher levels of support, but 1320 is acting as heavy resistance. So do you think it can get above that level and continue its recent rally?
You know, the casinos are acting better. LVS and Wynn, you know, they've been on the move. They've had nice areas. MGM, some guys like when I talk about it, so I'll take a look. I have no position right now in MGM, but it is holding higher. And this is a nice flag type pattern. This was the last time we spoke about it, right around here, gave you a nice move. So I would say this starts getting above 13 to 13.20 and the market wants to continue higher. This could be along for the ride. Real quickly, LVS gave you a really nice gap up to start the new year. If you guys remember, after this nice channel, and then since then, you know, it had a move on earnings and pulled in. So I would say even LVS, maybe see how it handles the 8-day for a buy the dip there.
And Facebook saw some downside follow through on Monday, closed below its 50-day. Where's resistance and support here?
I actually stopped out of the majority of my Facebook yesterday. I totally messed up this portion of the trade. From the start of the year, it was a really nice move. We talked about buying it at 24.75, again around 28, went as high as 32, sold it. And then after earnings, you know, after hours it was trading at 28, so it was nice, cute buy, went positive. Next day also opened down, you know, we bought it, went positive, so made some good money there. So then I stayed with it saying, oh, if they saved it on earnings, chances are it wants higher prices by year end. But again, I forgot how choppy Facebook could be. And then Friday showed relative weakness. Yeah, you know, over the weekend, Barron said it could be 25 when last time they said it could be 15 when it was 23, went to 32. So sometimes that puts short-term pressure. So anyway, you look at the chart here and you will see that, you know, if you're a swing trader, because I know Sperling added to his yesterday. He added saying, you know what, here is the last prior breakout, here's the 50-day. You know, this is a spot to get involved, especially pulling in from 32. So if you did there, okay, you know, at this point, you can have some resistance right around this 29.75. And I just think that this area is going to take some time to work through. This was clean to fill the gap. This was clean once again, but where to go and went into big resistance. You know, if you guys remember in my 2013 thesis, I said we can get to 32 to 34. It went to 32.50. So it happened quicker than I would have thought. But again, this type of penetration typically leads to higher prices. You know, today it's up a little. Watch 28.01. If they try and bring a negative, maybe they bring it through and come back above, or you know, they just grind it higher the same way they grinded it lower, which wouldn't surprise me either. And then here's that gap to see if it could fill. If it doesn't fill this gap over the course, I would say the next, you know, few sessions, chances are you could see a little bit more downside.
All right, threw in one long hit there.
Sorry about that.
So where's your focus heading into trading today?
My focus is seeing how much of yesterday's gap in the spiders the market could take back. We're opening up 7-8 handles. Yesterday closing the lows, so I do think that, you know, to buy the open right away could be tricky, but it doesn't mean you could just blaringly short it. You know, see how some of the banks hold up. You know, I'm going to look at some of those tech names. I'd like to see gold finally gap up, hold, get some power, so I could add to it instead of just selling some, making some money, and getting stopped out, which is what's happened with the metals over the course of the past month. So at this point, you know, we are headed higher, and like I said, either you take a full step back, you know, and not micromanage your positions and hold through and maybe give it to the 50 or 100 or 200 day, or you really trade on a micro basis, intraday, follow the 8-day, and you know, if you get stopped out, you know, that's your strategy and just accept it. But all in all, you know, there's things to do. You just have to be a little bit more specific because, you know, all these stocks have not been created equal whatsoever.
All right, and with that said, happy trading, everyone. Have a great Tuesday.